Good evening, everyone, and welcome to another exciting IQI Canada evening talk with none other than Shan Saeed. That's right, it's that time of the month again, when we invite our chief economist, Shan Saeed, who would give us an economic update, what's happening around the world, and also his outlook on certain things. So, Shan, welcome to Juwai IQI Canada evening talk. How are you doing?
Good morning, Yousaf. Good to be back.
Yes, thank you so much. It's good morning, so I want viewers to know it's 7 a.m. in the morning. So that's the beauty of Juwai IQI. One big happy family, 18,500 agents in 21 countries. And that's what I always say. It's a beauty, right? Just a phone call away, a click away. So when I said, Sean, let's do this, Sean said, well, that's okay. 7 o'clock in the morning. So thank you very much for that, Sean.
It is my pleasure.
So Sean, you know what? Before I get into questions and answers, I follow you on LinkedIn, I follow you on Facebook, and since we have met in since 2015, I've been following you up. Like just a question came to my mind all of a sudden was that how many times are you actually cited up in the newspaper on a monthly basis? Do you have that number?
Actually, no, because every now and then people would call me and they would ask for my comment. Yesterday morning, I was on Astro Avani, and so it depends on this developing story. If the story is very hot, especially on the global macroeconomy, the writers or the TV people, they will just call me and they will take my insight. So perhaps I feel that I'm very privileged that I get the first advantage, because most of the people in press and media in Malaysia or many parts of the world, they know that Shan has got expertise in global macro. Plus, I follow commodities market very religiously, the currency market. So overall, they know that if we talk to Shan, we will get facts and figures, which is based on critical reasoning, solid data, and above all, I share substance. I don't share tabloid stories or Cinderella stories with the market.
No, I know that for a fact on that, and that's the really something which as a company just want our advisor, our investors to know about it that because we have Shan Saeed, the chief economist, who's doing a world economy outlook and looking at different countries where interest rates are heading, where the economies are heading. Believe it or not, that helps so much in terms of your investment opportunity as well. And we, as a company, can guide you for your investment opportunities on that. So we have been joined by Kashif Ansari. Assalamu alaikum, Kashif. Thank you so much for joining in, for tuning in to our show. So, Shan, let's kickstart the program on that. Uh, I was just reading something, and Fed chairman made two statements on June 16 and 22nd, saying that discount rate will be raised by the end of 2023, and inflation numbers are getting higher. It was reported on Wall Street Journal on June 23, 2021. Uh, don't you think it's confusing? I mean, a statement that markets and the players. You have been saying since last September, October. I remember that price inflation numbers are serious. What do you have to say for this?
Yes, absolutely, Yusuf. The numbers are getting very, very serious. But unfortunately, the Fed chair, he's living in delusion. I think he doesn't really understand the ground realities. So when you make two statements in less than 7 days, it sends market in a very confusing state of mind, because investors, they don't really know how to allocate their funds, how to make their investment portfolio strategies. When a Fed chair on one day say, we will increase interest rate by the end of 2023, and then after 6 days he will say, oh, we will be patient with increasing the interest rate. So that puts market in a very tight situation. Look at what happened to the market. Copper prices went down by 8%, lumber prices went down by 15%, S&P went down by 2%, and after that it recovered. But when you make those statements, you have to be very careful, because as a Fed chair, the markets are looking and analyzing each and every word that you're saying very closely. So when you make a confusing statement, it clearly demonstrates that you don't have a clear roadmap. You don't have an exit strategy when you're going to increase interest rate. So I think, in my opinion, the Fed chair is panicking, and he doesn't really understand how to make the right move at this point of time. In the last 13 years, ever since US has started QE in December 2008, Fed has been behind the curve. So when you are not sure what you are saying and you don't have on the ground information, as one of my friends from Harvard, Sean Reen, based in Shanghai, he would say boots on the ground information. So when you don't have boots on the ground information, that's a very challenging situation for investors, and that sends market in a very tight spot. So I think, in my opinion, inflation numbers are getting higher. 4.2 in April, 5% in May, and inflation will continue to go up for the next 1 or 2 years.
So do you think is the 1970s style inflation is back? I mean, are you serious? Do you think like the Fed has lost the control of the market? And once again, stagflation hits which asset class will take the hit on that? I say it because I know like high inflation means like high discount rate to keep the price inflation in control, right? Which Fed chair is denying at the latest issue of the Economist magazine. I think it was on page 9. What do you think?
Yes, we are heading back to 1970s stagflation, and history is repeating itself after 51, 52 years. What happened in 1970s, you had a very high inflation rate. So what is stagflation? It is high inflation, high unemployment, and lower growth. So when you have this situation in the market, you call that as a stagflation. We are heading in the same manner. The inflation is getting higher, unemployment because of COVID is getting higher, 300 million people have gone into poverty level, and your growth rate is quite abysmal. So when you have these phases, obviously you are heading to stagflation. And what you're referring to from Economist magazine, uh, he is saying that yes, inflation is there, he is admitting it, but at the same time he's saying no, it won't be 1970 style deflation, stagflation. So it means he recognizes that yes, we are heading towards that situation, but he's saying this is all transitory, it's all temporary. But when you make these vague statements, it's quite ambiguous for a person like me when you say it's quite transitory or it's temporary. So temporary for how long? 6 months, 1 year, 2 years, 5 years. So temporary can go on. But people who have studied economics, they understand there are only two types of inflation: either you have inflation or you have no inflation. So whether we have deflation and inflation depends on the economies, but at the moment, yes, the inflation numbers are getting very serious. Coming back to your question, that in terms of stagflation and inflation, which asset class would take the first hit? Whenever you have inflation, obviously the central bank would raise interest rate. When you raise interest rate, the two asset classes that take the major hit, one is the equity market and the second is the bond market. And if you pick up a Financial Times 27th February, just like 3 4 months back, Warren Buffett said that bond market is the worst asset class to be in. So, we have
Right.
been saying this since last year, that people or investors should not stay long in the bond market. It's very simple. Your income level, let's say if you have taken position in US Treasury, and US Treasury 10 years are trading at 1.5, and your inflation is 5%. What is inflation? Your cost of living. So your income is 1.5, your inflation, your cost of living is 5. So you're already negative. You're not making any money. So you're negative by 3.5. So when customers or investors, they talk to me that, Chan, I want to take position in bond market, I normally tell them, when inflation goes higher, bond market and equity market are not good asset classes to take position. Historically speaking, whenever you have inflation, two asset classes have benefited: real estate and commodities. Why real estate? Because investors, they want to hedge themselves against inflation. So real estate is a perfect asset class. Number two is commodities. Whenever you have inflation, like in 1970s, I still remember my mother told me, in 1971 the gold price was $35 per ounce. In 1976 the gold price was $150 per ounce. By 1981, gold price was $600 per ounce. So from 1976 to 1981, gold prices went up by 300%. So commodities have always benefited along with real estate in times of inflation. So people or investors who understand history and economics, those sophisticated and smart, they've always taken position in two asset classes. One is real estate, another is gold and silver. And I have been saying, and this is the perfect time that proves, what we have been sharing with our valued investors, that whatever we share is based on historical data, understanding the market, getting on the ground information. For investors, that is the key, so that investors, they stay ahead of the game.
Absolutely, Sean, and I can vouch for that because I remember in 2015 when we met, the first thing you told me was that you said, anything you can get your hands and hold on to it, whether it is related to real estate or gold, something you can have your hands on, that is where you should be, looking at that asset because that is something which will appreciate, and we have seen that whether it comes to real estate and also as you just now mentioned about the gold as well. So we've been joined by a couple of more people. It's Salman Lapara, who is our VP Strategic Planning and Marketing. Hey, Salman, hope you're doing well. Thank you for joining us on that. So, Sean, what about other central banks? I mean, recently central banks like Brazil, Hungary, they have raised their discount rates. I mean, what is the outlook of others like China and Russia? I have inflation numbers in front of me. That I picked up from Financial Times about 3 days back. USA 5%, UK 3%, Europe 2%, Sweden 1.8%. Any major development globally, especially in digital yuan?
Yes, Yusuf, if you look at the market, as you rightly pointed out, many central banks are realizing the hawkish tone of Fed, that they will increase the interest rate. And once Fed increases the rates, it will have a ripple effect on emerging economies. So in order to counter those, banks like the central banks from Hungary, Brazil. Look at Brazil. The situation of COVID is so bad, and from 3.5% Brazil central bank, they have raised interest rates to 4.25%. So whenever Fed raises the interest rate discount rate, the other emerging market currencies, they depreciate against USD. So in order to have a preemptive strategy, I would say they have done it, and they understand that Fed would eventually hike the interest rate. So I think this is a clear signal to the market that interest rate would eventually would rise. I think not in 2023; it would happen much earlier, because Fed is panicking right now. So when a governor of the central bank is panicking and he's sending mixed signals to the market, it sends a wrong signal to the market, and they feel that the Fed chair is not in a position to give a clear statement. So forward guidance is quite ambiguous. It's not very clear to many people what will happen. In terms of a global outlook, yes, many central banks are now pondering over what we have to do in the next 12 to 17 months. So next 12 to 17 months are very crucial for the global economy, because that will give the direction, the future direction to the global economy, that where we are heading, whether we will have a smooth recovery, whether we will have a questionable recovery, whether we will have the still fragilities that are still right now in the markets, or we will have a smooth sailing. In my opinion, the global economy will remain fragile. We will have uncertain times, we will have lower growth, and interest rates would go up. In my opinion, digital yuan would come in the market. China and Russia are ready. Once they hit 5,000 metric tons of gold, they will announce that Chinese yuan is coming in the market. But the biggest story that nobody is talking about is from Russia. If you know, Russia has got $120 billion of reserves. For that is their sovereign wealth fund. Russia has moved their reserves out of US dollar, and they have allocated their reserves 40% in euro, 30% in Chinese yuan, 20% in gold, and 10% in other currency. So that gives signal to the market that many central banks are ready to leave US dollar, and they want to move into Chinese yuan. So once Russia move its sovereign wealth fund reserves in yuan, that will be a huge news in the market, and nobody is talking about it. And I give full credit to Putin and to the central bank governor Alvira Nabulina, who in 2016 offloaded all her US dollar position, and people were criticizing her, and she went long on gold, and people said, Alvira, she has made the wrong statement. But after 5 years, time has proven that she is perhaps one of the smartest central bank governors, that she offloaded her US dollar and she went long on gold. So now Russia is ready, and they will eventually adopt Chinese yuan for the transaction. And eventually, China will announce that all the emerging market economies who are dealing with China, they should start trading in yuan. So once digital yuan comes in by February 2020 at the start of Winter Olympics and Chinese yuan starts, I think that will be a good competition to US dollar, and it might end the hegemony of US dollar.
Amazing, amazing. So I've got a couple of more people who joined us, Sean, right now. Emerson, all the way from Malaysia. Thank you, Emerson, for joining us. And we also have Tony, all the way from Cambodia. Good morning to you as well on that. Now, every time when we talk about digital yuan and then we talk about the cryptocurrency, I have to keep asking you this question, Sean. The reason is that because I saw one of your sharings on Facebook, I think it was on June 22nd or 23rd, where I saw the Bitcoin has gone down by 30,000. It fell down by 30,000 on that. Again, I know you have always talked about Bitcoin. Uh, what do you think? What's going to happen? Is it going to come back up again? It's just been jumping up and down.
Yes, Yusuf, it has been going and taking wild swings like a pendulum. So as you know that I am not a big fan. And once I give a statement in the market, I stick to one statement. The reason the press and media people, they follow Shan Saeed, or for that matter, they follow Juwai IQI, that I have the confidence that once I make the statement, I stick to that. I don't keep changing my statements after every month or every week, because then you lose your credibility,
That's true.
that you lose your integrity. So in the market, it's very important that you make one statement. And I always tell people I cannot make a sugar-coated statement. I can't make sweeping statement that will make people happy. I am not into ice cream business that I have to make everyone happy. I'm into service industry. And in service industry, two variables are very important. One is your credibility, and one is your integrity. And I have built my brand, Shan Saeed, after a lot of hard work, because I go and I write, contribute articles for press and magazines. So that gives me an added advantage, that whatever I say in press that is documented, I say the same on media. So people, they can counter check what did I say in 2017 and 18 or 19 or whatever. And then they say, okay, Shan, you are not a big fan of Bitcoin and you have been saying since 2016. And after 5 years, my position is still the same. When you have a variable, you don't understand the head and the leg of that, and it doesn't have a stomach. How can you take position? And as I said, for Bitcoin, the first thing is you don't know the origin of the
Yeah.
funds. You don't know the source of fund. Excuse me. When you go to the bank right now, to any bank, Royal Bank of Scotland, Royal Bank of Canada, and you say, I want to open my account with 500,000 Canadian dollars, the first thing that they will ask you, that Yousaf Iqbal, how did you get your money? Is it your
True.
salary money? Is it your
True.
business money? Or
True.
you have got this commission money? Or you have made a trade transaction in, let's say, in China. So you have received this money. So you
Yeah.
will eventually answer, because they have to fill out the KYC form. And the second
Absolutely.
question, the banker would ask you, what is the use of this fund? How are you going to use this fund? So you will say, I will withdraw $30,000 or $10,000 because I have to pay for my son's university fees. I have to do some transaction in US or in Malaysia or in China. So this is how I'm going to use these funds. So source of fund and use of fund, these are the two major questions any banker would ask you when they are going to open your bank account. But in Bitcoin, you don't know where the money is coming from, whether it's a windfall, or I have
Yeah.
stolen this money, or
Yeah.
I have, taken this money from Yusuf's table. So nobody knows. I just take position in Bitcoin, and one fine day the Bitcoin jumps from 30,000 to 40,000, and next day it falls down from 40,000 to 35,000 or whatever. So I think I am not a big fan. Eventually, Bitcoin will stop. And people were talking that Bitcoin will touch 1 million and 3 million and 5
Yeah,
million. I don't see that happening because it is not regulated right now. So a variable that is not regulated, people don't have confidence. And if you look at it, most of those sophisticated and smart investors, they are not even touching it. So when you ask these sophisticated and smart investors who understand history and economics, if you ask them, do you have you taken position in Bitcoin? They say, no, Shan. I stick to real estate. I stick to equities. I stick to my bond market. I stick to gold and silver or oil or arts or yachts or whatever. But Bitcoin is not for sophisticated and smart investors. Bitcoin for those who don't understand history and economics.
absolutely, Shan. And I remember that when we were in Dubai, I think it was 2016 or 17 at Cityscape. Just after that, we had your talk at Pakistan Business Council in Dubai. And again, the question was raised to you about the Bitcoin. And as you rightly said, you still stand by what you said at that time, that you're not a very big fan of Bitcoin, and exactly, you don't know, where this is coming from, and the accountability of it on that. So yeah, obviously, yes, you stick to your statement on that. Again, Bitcoin is something where we've seen going from 5,000 to 40,000 to 30,000. Again, they were going down on that. As you rightly said, again, coming back to that asset class, something which you can hold on to it, whether it is real estate or gold or silver. That's where all these sophisticated and smart investors are looking to invest on that. We've been joined by a couple of more people. We're going to say hi to them. Morning from Eric Kong. Good morning to you. And we have IQI Cambodia. Good morning to you guys as well. See the huge, big family all over the world watching Shan Saeed and getting his insights on the economic outlook. Now, Shan, of course, my another question is about the oil prices up and trading at $76 a barrel. I mean, you have again hit the target of price of $70 per barrel this year. I mean, great call. Honestly, I remember again the way I always relate back to Dubai is that when we were talking about it, and every time I'm with Shan Saeed at our whether I'm in Malaysia or I'm in Dubai, for any of our company events, I always take opinions from Shan. Said, what do you think is going to happen to oil? What's going to happen on it? And Shan has always, predicted it, and I can tell you, it's been going great on that. So again, what's the revised price for the outlook for the, for the H221? And tell me something like, I know you've been following up the oil market since 1999, and so you have been on dot on many occasions. What's so fascinating about the whole oil market, Sean?
Thank you, Yusuf. Yes, at the start of the year, we said the oil prices will meander around between 50 and $70 per barrel. By 8th March, oil was already trading at $70. Now, as you rightly said, oil is trading at $76 per barrel. For H2, if you look, you must have seen the newsletter, and for the benefit of our
Yeah.
viewers, oil will be trading between 73 and $87 per barrel for H2. What is the
Wow.
premise? The premise is very simple. Many economies are opening up, demand is getting higher, there are supply constraints. So, when you have these three factors, and of course, if US dollar depreciates further, it will add a momentum to the oil market, and oil market will stay in the north. So, in my opinion, oil prices will be trading higher. And for next year, I haven't come out with a forecast, but I've already shared in the market 2 days, 3 days back that oil prices will stay above $80 per barrel. So I think we are heading for an era where oil prices will stay higher because many economies are still under lockdown. Once they open up, people would like to go out, they would like to travel, they would like to travel around. And your life and my life, it depends on oil and gas. How do you travel to office? You use either diesel or oil or gas or LNG or CNG. So what is fascinating about oil market that everyone is dependent on oil. whether it's manufacturing, whether it's chemical, whether there are so many industries, whether even for that matter, Bitcoin. You have to, churn out Bitcoins, you have to use energy. And for energy, you need oil and gas. So I have been following this market since 1999. And there was a question a month back from someone that, Shan, why you are following oil market when you are working for a real estate brokerage house? So I told him that, everything is dependent on oil and gas. Even for real estate, you need so many material, and to transport those material, you need oil and gas. So when you're looking at the economy, you need to look at the macro picture. You need to look at the totality. You need to look at the strategic picture. You need to look at the submissions. You can't just make a sweeping statement out of thin air that, because of one single variable, whole economy is bad. And people say it is the real estate market that drives the economy. Absolutely wrong. It is the macro economy that is driving the real estate. Look at Canada, and we will discuss about it. That because economic recovery is so strong in Canada, real estate market is booming. So one industry doesn't drive the whole economy. It is the economy that drives the whole industry, whether it's oil and gas, whether it's real estate, whether it's manufacturing, whether there are many industries. So I think what really fascinates me is the oil market is it gives direction to many industries. It gives direction to the global economy. It gives direction to interest rates, and it gives direction what will be happening in the next 3 to 5 years.
You're very well said, Sean. What you just now said, especially about the travel part. I was actually on this weekend, I was in Ottawa, had a meeting with a couple of developers there for one of my clients. And while, things are opening up here in Canada, we are now tomorrow, from the 30th, actually, we are going into a phase two. And while we were still on phase one, I could see a lot of people were traveling. When I was in Ottawa downtown, a lot of people were out. And as you said, rightly, when things are starting opening up, people will start traveling, using their cars on that. We will see the oil prices going up on that. And, $80 a barrel, I'm sure, as you have been pretty much spot on all your, on your targets. I think we're going to see an $80 a barrel as well on that. Now, talking about the Canadian real estate, the market remains really hot. The transaction volumes are hitting new high. How do you see the real estate market, and what's the economic outlook? And because the reason I say is that, as you know, for Canada especially, immigrants, we're looking at about 1.2 million immigrants coming up, in next 3 years. Now, they're talking about international students will be returning back by September, because majority of us are getting vaccinated, and that's where the things are opening up. And when you and I were sharing some numbers on the real estate side, and the average price of a detached home, again, we're talking about Toronto Real Estate Board, and the numbers has gone up to 1.4 million, as compared to last year we were at like 1 million, 31.1 million. And again, I think it's just like the demand is going up so much right now, and the supply, the typical spring market supply gets a bit better. But believe it or not, even like today, you're putting up an offer on a detached home, you're seeing about 7, 8, 10 offers coming up, and we're talking about a property price of going over 1.2 to 1.4 million, on that. So what's your outlook in terms of the real estate market and economic outlook for 2021?
One word, Yusuf, it is a macroeconomic stability. Once you have macroeconomic stability, the economic confidence comes back. As you said, now they are inviting international students by September. So once those international students they come back, obviously the market will get hotter as well. And the immigrants, so 1.2 million immigrants coming the next 3 to 5 years, again that will keep momentum in the real estate. As you said, from 1.1 million now it's 1.4 million. That clearly sends a signal where the market is heading. So we can't expect depressed prices in Canada. The prices will continue to rise. So I think this is the best time to make an entry in Canadian real estate, because that is going to help many investors in terms of price appreciation. It's going to help them in rental yields. And obviously, when you have momentum in the economy, it lifts up all the industries. When you have macroeconomic stability, you have low interest rates, inflation numbers are still are under control. They're 3.4% as compared to US, where inflation is 5%. Canada is still an attractive place. And again, it boils down to brand. When you ask people from Pakistan or India or Sri Lanka or China, what do you think of Canada as a brand? So the first thing that comes to your mind is stability. Stability is very important for those global investors. When you talk to those parents who are looking at Canada, they say Canadian education system is very good. Is at par with US. So if you have studied from US or if you studied from Canada, it's more or less the same because the education standards, the valuations are more or less the same. So for global investors, three things are very important. One is stability. Number two is education for the children. Number three is the housing and the medical facilities. So housing and medical facilities in Canada are at par. It's a first world country. So I think, in my opinion, Canada will remain a very attractive place for many global investors because the economic recovery is very strong and government has got policy levers, government has got policy instrument to keep the momentum going, which is very good. And central bank is in total control of the economy because they feel that economy still has quite a room to take the pressure of lower interest rate. Once the inflation numbers will go up, obviously, the government and the central bank, they will take their own decision. But right now, I would say it's a good time to make an entry in the Canadian real estate. And I see you will getting more and more busier, and you won't talk to me for the next 1 month. So I'm very happy Yusuf won't be talking because you'll be so busy in your transactions, you don't have time to talk to Shan Saeed.
You know what, Shan, you rightly said. I can tell you one thing. Globally, for Juwai IQI, we are up by 300%. For IQI Canada, in terms of our sales volumes, we are up by 800%. That's how busy we have got in got for this market. And as you
Excellent.
rightly said, Sean, the especially Canada has, during the pandemic, has marketed itself very, very well into international markets. People are looking, to move to Canada, and I think there will be much more influx of people coming in. Again, very important thing, as Sanya mentioned, the students who come here, they graduate. When they graduate, they'll get a 3 year of work permit. As soon as they get a 3 year work permit converted to a PR card, guess what? The first thing they want to do is that they want to buy a house. They want to buy an apartment. They want to get into real estate because they don't want to be left out on that. I've been telling this since last 6 months, when the market was slowing down a little bit, especially in the condo market. People were saying that now, because of the pandemic, people are not going to be staying in the condo market. They want to move out. They want to work from home. Guess what? We've seen the condo market right now. The prices are going up. It's getting hot because for a first time home buyer, or from an investor perspective, it's easy to get into a condo market as compared to a detached home where you're going to a price of 1.4, 1.5 million on that, right? So we have been making this call ourselves as well, that condo prices will continue to grow. And as you rightly mentioned it, I think the real estate aspect for Canada, especially for the Ontario and for the GTA, I think this is going to be a continued growth on that. And as you rightly said, this is the right investment people to get into it. And I just want to tell my viewers, what the good thing about the whole team of Juwai IQI globally and Canada, we are your advisors. We are not here just to sell you anything, but we are here to advise you. So always just give us a call. We are more than happy to advise you on maybe this is the right thing, this is the right property for you to buy or sell on that. So with this note, Shan, anything else you want to add?
Yes, Yusuf, I would say that it's all about brand positioning. So once the brands are positioned in such a manner that it creates positive vibes, then investors will flock into those countries. So what Canada has done in the last 20-25 years, I have been following people in Pakistan since 1996 who have moved to Canada. My own teacher's family, who is the principal of St. Paul's School in Karachi, his whole family lives in Toronto. And his family moved to Canada in 1996. And he lives in Karachi because he's quite passionate about Pakistan. But he has been telling me that, my family is so at peace and they really enjoy the living in a first world country. So I would say Canada has really marketed herself in such a way that most of those global investors, when they look at Canada, they say, okay, this is the first choice to live. And it gives a strategic advantage to Canada in the long run, because at the end of the day, it's all about brand. How Canada has positioned, not only in financial markets, but also for other investors, is simply remarkable.
Amazing. Thank you very much, Sean. You know what? Our time goes so quickly with you, and we always look forward for this session. So thank you so much, Shan Saeed, for your economic outlook and for Juwai IQI Canada Evening Talks. With this note, please take care of yourself. Thank you so much, Sean, and we look forward for the next session very, very soon. Thank you so much.
Thank,
Take care. Bye
thank
bye.
you. Bye bye.